Hello there, I'm Adrian Botham from How to Invest in Shares. Thanks for dropping by. One of the biggest problems that beginners have when buying shares is knowing how much to pay for them. So in this video, I'm going to show you 3 different methods to value any business or company and then calculate its corresponding share price. The first method I'm going to show you is known as the Net Asset Valuation Model, also known as the Sum of the Parts model, because it involves calculating what all the assets and liabilities of a business are worth and then adding them up. So for example, you would consider assets such as buildings, machinery, equipment, inventory, cash, company investments and so on, and you would consider liabilities such as bank loans, leasing agreements and goods which the company has bought but not yet paid for. If you are buying the company outright, you would value the company's assets and liabilities individually using a process known as due diligence. As a share investor, this method is not available to us, so we need to get the summary values from the company's balance sheet. The balance sheet lists all of a company's assets and liabilities and the value that the company believes they are worth at the time the balance sheet was produced. The balance sheet is a key document within every published set of accounts and so is available to investors in the half-year and full-year results. To make it even easier for us, the net asset value of a company is usually calculated for us and shown as a separate line in the balance sheet. Having got the net asset value of the business, we then divide this by the number of shares issued by the company to arrive at the share price. The second method I'm going to show you is a price to earnings or PE comparison method. We take the annual earnings or profits of the company and multiply by the number of years of earnings we think the company is worth. The best way to get this multiplication factor is to compare against the price to earnings ratios of similar companies on the stock market. We then adjust the multiple, if required, to reflect the future prospects of the company we want to value compared with those of the reference companies we are using. This method is extremely easy to use for shares because the multiple is exactly the same number as dividing the share price by the earnings per share, EPS. The EPS figure is widely available for companies already on the stock market and so is a useful way of deciding whether a share is overvalued or undervalued. The last method I'm going to show you today is the discounted cash flow method, DCF. It is the most complicated method by far and is not necessarily better or more accurate than the other methods. It involves calculating the free cash flows of future years when the business is rapidly growing and a terminal value of the business when it has reached steady state in 10 to 15 years' time. As you can appreciate, that is a lot of complicated financial calculations and assumptions just to get those annual figures. You then turn those figures into net present values by discounting them back to today's value of money using an assumed cost of capital. This is the method that the stock market analysts and professional investors use, but it is not a method that I would suggest beginners use unless you are an accountant. So which method is best for you? All 3 methods have their advantages and disadvantages. None of them are perfect. The best one to use for your company will depend on what kind of company it is. For asset-rich businesses like a property firm, the net asset value method is the most useful. For companies with few assets, The PE comparison is widely used. The DCF method is best used by professional investors when buying high growth companies or those with predictable cash flows. If you are not yet investing in shares but you would like to, then I have a free gift available for you. You can access my free guide How to Start Investing in Shares by going to www.howtoinvestinShares.co.uk/products/free guide. The guide won't be available free forever, so why not grab it right now and make a positive start. Or if you have any questions, you can ask me anything you like about share investing by going to www.howtoinvestinShares.co.uk/ask-Adrian. Thank you very much for your time today. My name is Adrian Botham. I'd love to show you how easy it is to begin investing in shares. Bye bye for now.